Hi, everybody. Today's Facts in 5 video is all about basis. What is it? When do you have to be concerned about it? You may have heard terms like carryover basis and stepped up basis. So what do these terms mean and when do they apply? So the first basic question is the name of the presentation. What is basis? In simplest terms, basis is a tax term and it essentially means what you paid for an asset. So I buy stock in Amazon for $1,000. My basis in that stock is $1,000. So why is it important? Why do we care about what your basis in something is? Well, really, it's the IRS, or here in Connecticut, it's the Department of Revenue that cares what your basis is, because they use your basis in an asset for purposes of determining whether you recognize a gain or a loss when you subsequently sell that asset. So same example here, you have that Amazon stock that you bought for $1,000, and a couple years later, it's worth $5,000. So you sell it, you have now recognized a gain of $4,000. You paid $1,000, you sell for $5,000. There's a $4,000 gain there that may now be subject to taxes. So what are those taxes? Typically, what we're worried about is capital gains tax. And there's both a Connecticut state capital gains tax and a federal capital gains tax. Connecticut's capital gain tax rate is approximately 7%. It's 6.99, but for purposes of our presentation today, we'll just call it 7%. And the maximum federal gains tax rate is 20%. With the federal gains tax rate, there's a sliding scale. So just like with your income taxes, you might be in a different capital gains tax bracket depending on the amount of income you have every year. But the max is 20%. So if you sell an asset, the maximum combined tax rate we're looking at between both Connecticut and federal tax rates can be 27%. So, I mean, that's a pretty big chunk of money. So we're not talking insubstantial numbers here. And it's also important to realize there's different tax treatment for short-term capital gains versus long-term capital gains. Short-term capital gains apply when you only hold an asset for 1 year or less. So if you bought that Amazon stock and 6 months later you sold it, we're not looking at those long-term capital gains tax rate. It's really only going to be taxed at your normal, ordinary income tax rates. If instead that Amazon stock that you bought, you hold on to it for 2 or 3 years and then sell it, like in the prior hypothetical, that's when we're looking at those long-term capital gains tax rates, which are the ones we reference in the top of the slide here. So just important to note, there's a difference on tax treatment depending on how long you hold an asset before you sell it. Also, there's 2 important key terms here that I want to go over. The first is carryover basis. The second is stepped up basis. So we'll start with carryover basis. Carryover basis is when somebody gives you an asset during their lifetime. So in this example here, mom gifts you her house in 2020. She bought the house back in 1980 for $100,000. You get carryover basis in the house, which means you carry over whatever mom's basis in the house was. So since she bought the house for $100,000, she gives you the house, your basis in the house is now $100,000. So 3 years later, let's say you then sell mom's house for $250,000. You have now recognized a long-term capital gain of $150,000. Your basis was 100, you sell for 250, there's $150,000 worth of gain that you're now going to have to pay taxes on. Stepped up basis is when instead of getting an asset through a gift, you inherit the asset. So in this hypothetical, it's a little bit different. Mom still bought her house for $100,000 back in 1980, but instead of giving you the house during her lifetime, mom owns the house until she dies. Her will says it passes to you when she passes away in 2023. In 2023, the fair market value of the house is $250,000. So because you get now stepped up basis in inherited assets, your basis in the house is the fair market value as of the date of mom's death. So your basis in the house is $250,000. So if you then sell the house for $250,000, there's no gain, there's no taxes to be paid. So there is a really big tax benefit to allowing people to inherit your assets versus giving those assets to them during lifetime. But there's other considerations at play. A lot of times we're considering gifting assets when we're trying to avoid assets becoming subject to potential long-term care costs, Medicaid eligibility and such. So there are still reasons why gifting assets might make sense, But just from a broad standpoint, inheriting assets is going to let those beneficiaries or those recipients of those assets, you're going to leave them in a much better tax position if they inherit the assets versus gifting them the assets. So if you have any more questions, please feel free to contact us. Our website is www.kkc-law.com. All my contact information is on the website as well. So please feel free to reach out if you have any more questions about BASIS or anything else in regards to estate planning or probate administration or elder law concerns.